How big you think this can get?
This is literally a $100 billion plus story. I'm again not trying to take the jobs of DevOps here, but we are going after the 150 billion TAM of DevOps. My view is that future should be that everything is autonomous and we don't need that role in an organization.
And why do you think the timing is right for you?
Because if AI is writing your code, someone has to write your infrastructure.
I don't know how many founders are there who have built 5 companies in the past and sold all of them. How do you time the exit?
We have grown up hearing time is money, but I think timing is money. A good outcome for any startup is that you have to be bought and not sold.
First company made you financially retired. So what's been the motivation to build companies one after the other?
Because opportunity always presents. Are you going to welcome it or are you going to ignore it? And it starts with, is the problem worth solving? A good combination of big problem, an important problem, and urgent will get you success.
Hi, this is Siddharth Aluwalia, your host at Neon Show and managing partner at Neon Fund, a fund that invests in the best of enterprise AI companies between US-India corridor. Today I have with me Sachin Aggarwal, founder of StackGen. The unique thing about Sachin is he has built 5 companies in the past and all were acquired. Sachin, welcome to the Neon Show.
Thanks, glad Siddharth, for having me. It's my pleasure to be with you here.
Thank you for doing this podcast at your home, right? It's an amazing setting, and would love to dive into your journeys today as a repeat founder. Right? It's very unique. I don't know how many founders are there across the world who have built 5 companies in the past and sold all of them.
So, I was not born entrepreneur, I would say. I started my journey with KPMG as a management consultant. I got an opportunity to do a management buyout of the profit center of a consulting company that we were setting up. And that got me an entrepreneurial bug. And then after that, I set up 5 different companies, sold them to public listed companies, each of them successful exits for my shareholders, my employees, created wealth for everybody. And I have fun. I'm having fun.
Yeah. And StackGen is your 6th company, right?
So 6th in tech, the first one was a services company.
Yeah. So it's very unique, right, that you have built and scaled companies. So if you can tell us about, your learnings on each of these patterns on how companies get acquired.
So I would say each journey is different. If I have to generalize one thing, that a good outcome for any startup is that you have to be bought and not sold. Um, uh, I have run parallel process in each of my companies, like a dual track process where we are about to scale. It's an inflection point. We're trying to scale. We are trying to get to like next sort of financing, whether Series B, Series C, whatever. In parallel, we are starting the discussions around M&A, and then there's a strategic fit with someone, and the M&A happens. So it's always been the pattern. I think that one common pattern for us has always been that we are never selling. We are always sort of building the company, and the strategic buyer has come and bought us out.
Yeah. And can you describe some of the low moments during these previous 5 companies?
I mean, all 5 companies have had low moments. Even this one always will have low moment. You're always, as a founder, you're always doubting your idea. You always want to do more than what you can do. And I would, if I have to pick up one low moment, would always be that I sometimes feel that I go to a customer and I think there's a perfect fit for what we're building. We explain to them our use cases and the pain points that they have. We think there's a good fit, and we realize that they are not engaging with us. And I think you just start doubting whether we didn't do well, whether whether our messaging is not resonating, whether it's a product. So I think those are the biggest low moments for any founder, when you think you're building something meaningful and you're not getting the response they're looking for.
One of my observations has been, maybe this is attributed to you being a serial entrepreneur, is your observations are very, very sharp, right, in all the conversations that we have. How did you build this muscle?
I think it's I don't know, but I think it's probably natural. And I think I think if you start with the basics of what you're building and building something more meaningful for the community that someone will use at scale, I think things follow, in my view.
And what role has luck played out in each of the companies? Because having, one successful outcome after the other is no joke, right? People have failed in their next companies. Even the first was a blockbuster. So I'm trying to find out for our listeners, the patterns that you put as inputs in these journeys.
So I think we are always trying to. So I invest a lot of time before I jump into a startup. So I do a lot of research on my own. I want to be convinced that if I was an investor, if I was a customer, would I buy it? Across all my startups, I also do a lot of soul searching whether this is a problem worth solving. I don't know about the luck factor. I would say it's a timing. I know traditionally we have grown up hearing time is money. I think that may be true, but I think timing is money. So if you time your startups, if you time your stories, I think.
Can you give examples of timing? And because our listeners would be curious by now, what would be each one of your journeys across the previous journeys, and how did the timing matter in each of them?
Sure. So let's start with my first tech venture was in healthcare.
Which year was
That
this?
was 2008. So it's very important that you ask me that question because 2007, 2008, we know we all had financial tsunami, the whole subprime crisis. And Obama became a president, trying to restructure everything, and he dropped his energy bill to healthcare bill. Of course, we all know Obamacare. Uh, I realized that if there's a good enough mandate from the top about healthcare, then there must be something in it. So talking about timing, if you want to be successful in healthcare startups, my personal advice is that latch onto some initiative, whether it's compliance or whether it's government initiative, or somewhere where there's a wave of creating wealth and solving a problem. Because otherwise, hospitals, doctors don't buy anything. Everybody knows how healthcare vertical is. So that is the timing, because now if you can latch onto that initiative that Obama was trying to give to the broader community, you latch onto that initiative and you make money. So I used to joke in my investor meetings that our President Obama is my chief marketing officer.
And what was the problem that you were solving in healthcare?
So there we were solving the problem that Obama was trying to solve is how do we bring the tertiary health data into mainstream health. So let's say someone has an accident on the road, is diabetic, and you do not know that you comes into ER suddenly and doesn't know the doctor doesn't know that the patient cannot be given glucose or any sugar, then it could be at risk. So the way to solve this problem is to give ambulatory or the outpatient EHR or the health record systems to the patients, to your primary care physicians. And the idea there was that the government will give you $45,000. I forget the amount, but government will give you $45,000 if you are digitizing your medical records inside the physician office. So all you have to do is just convince the doctor offices that you are the best solution, and then government is going to fund it anyway to you.
So basically, the EHR which was sitting in hospitals or in central government repository, you bought it into
physicians' offices, and we also created. In 2009, we created what was then called as. It was not known as Healthcare Information Exchange, so we sort of pioneered that wave and rode the wave of Healthcare Information Exchange.
And in that company, if you can share roughly ballpark, how far in revenue did you went to?
So by the time we had an exit, we were around $8 million in revenue. And it all happened in a year and a half because of the momentum that we created.
And how did the exit happen? Like, how did the buyers come to know about you?
Okay, so that was actually a very good question again. I was actually trying to acquire a company in that journey. And that was a company that would do like a RCM, like a revenue cycle management, like a services. Idea was that they'll bring 2,000 physicians onto our platform. And for that, I was raising money from a private equity firm. And they actually they just bought into the vision, and they bought me out for a price that I could not refuse.
Wow. How old were you when you started this company?
This company, I was 35, 36. Yeah. So yeah.
And what made you, because I believe it was a successful exit, right? You could have relaxed.
So I had already had an exit before that from a services company. So financially, actually, I was already done.
Okay, you were already retired.
Already retired. So I started my first. If your question was which was my first company, that was in services. We took that global, 1,400 people, 14 countries.
Which year did you started the services?
That was 96, and I was 24-year-old. So yeah, and we thought we would conquer the world at that time. Yes.
And how far in revenue you went?
That was that company went all the way up to $50+ million.
And that company you exited in 2006 timeframe?
Yes, you're right. So that's the longest I've run any company for 10 years. But that was global, so that's why that breaks me. That's why I'm not afraid to set up offices globally, because we ran a global organization across.
I believe it would have been a 500 to 1,000 member company that you ran.
It was 1,400 people. Yes.
Yeah. And all the companies that you have built, you have been the CEO.
Yes.
Even the services company.
Yeah. Yes. There were exceptions when I was sort of that I would start as a CEO, but then I would just hand it over to a CEO and then take a board position if I'm already starting to work on a different idea. So I've had few of those, couple of those in between. But broadly, I would start with founding the company with the right people, take it to a certain scale, uh, and then be a board member, because then I'm already working on a different idea.
So, in the first company, right, you mentioned earlier that you have been able to figure out timing well as an entrepreneur. What was the timing in the first services company that you?
First service company provided a unique opportunity because I was in Singapore with KPMG, and my customer was
As a
in
24-year-old.
24-year-old, yeah. But I was a graduate trainee, right? How you are, and I realized that it's a pretty long ladder to be a partner. I should look at that as what 20-year journey. Okay, who wants to stay here? But my customer was in Indonesia, Jakarta. It was a large Chinese conglomerate. They liked, uh, uh, they really liked what I was doing for KPMG, and they basically made a direct offer to me. So they worked out their non-compete or whatever with KPMG at that time. So I joined them directly, and uh, I didn't know what I was doing, but I moved to Indonesia, Jakarta. I worked with them, and so the timing there was that Indonesia at that time was like a tiger economy. 96, 97, a lot of money was getting poured in. But the reason I could be an entrepreneur, because the timing again played in our favor, because a financial tsunami happened in Indonesia. There was a currency, if you remember George Soros, the
Asian
whole
crisis.
Asian crisis, the big Asian crisis, because of the currency arbitration and the devaluation of the currency, right? Because of that, because the Chinese group was over leveraged, we did a management buyout of that startup. So again, it's a timing, an opportunity that presented to ourselves. We took it. We took that. We never looked back. Same year, I moved to Australia, started an office there, grew that to $3 million business in like 6 months, and then we never looked back.
Okay.
So yeah,
Wow.
it's always been timing.
So this is the first services company where the Chinese company got you as a CEO initially?
No. So Chinese conglomerate brought me as the strategy consultant. So I was part of the strategy group. I convinced them to create it as a profit center. So we grew that practice to 80 people. Then the financial crisis happened. Then I said, hey, I have this 80 people team, can I buy out? And by the time we were already serving Jakarta Stock Exchange, some large banks in Indonesia. So we were already servicing customers outside the Chinese group.
But back then you were pretty young,
I was
24, 25,
26 by the time
to
this
know
all
about
happened.
the buyouts and stuff.
Yeah. I may have heard somewhere, someone would have said you can do that. I don't know. Yeah.
So the first company you ran for 10 years, the second company you ran for 2 years.
2008, 2011, 2 to 3 years. Yes.
3 years. But what's been the motivation? Like first company made you financially retired, right? So what's been the motivation to again build companies one after the other?
I think you always come across a nice problem. You always come across good founders who will bring you good ideas, and then you start falling in love with that idea, and you start. If the problem is meaningful, I think it doesn't matter how much money you have in a bank. If you think it's worth solving, I think you jump onto it. And when I'm a founder, I'm not really thinking about the money that we have in the bank. I'm just thinking about I'm building. I operate like a scrap. Like I will travel economy class. If it's like I will just bring, like if it's vacation, of course I'll do whatever it takes. Splurge ourselves and go to Four Seasons or whatever. But if it's when I'm in a startup for company, I would just be like as scrappy as I was 24-year-old. I just want to feel like that I'm a hungry startup founder, and so that keeps us going.
Wow. And you still are building, technically your 7th company and the 6th product company. So before I move to, StackGen, I want to cover each one of your journeys in summaries, right? I think the key thing that I want to pass to the listeners is the thing about timing that you bought.
So let's start in a reverse order. So the last one was the company that we sold to Tenable, Accurix. It was the automation was happening on the infrastructure side.
This is which year, if you can share?
This was done in 2018, 2019.
Okay.
So 2018, 2019, we built a company during COVID actually. So 2020 is when we started building it.
And what was the name?
Accurix.
Okay.
And that company, we literally, the day we got our series seed funding, the next day we were in lockdown. So we had to build a culture remotely and everything. that the reason that I would say timing was important in that, because it was an idea that was born to say that the cloud is actually being programmatically built using Terraform and using infrastructure as code, but which will also mean that the security of the cloud should not be on the right, it should be on the left.
What do you mean by right and left?
So what I mean is that if your application is already running on the cloud and then you're doing security, it's already too late because you're already exposed to the vulnerabilities. If you are able to catch those errors early on your pipeline, and that's what we mean by shift left, then you're basically avoiding those things to happen in runtime. So we were the first ones, we and there was another startup of similar size. We were the two pioneers in that industry, just two companies pretty much, who made money and were very successful, who took a view that the cloud security has to be shifted left. So we basically were the people who created what people now call as shift left CSPM as a segment. So the reason the timing there was good, because we saw there was the adoption of infrastructure as code to programmatically develop cloud, which we thought was a good place to now invest into security, because you're securing an asset or securing the pipeline, which is sort of creating the cloud.
So basically, it was a security company.
It was a security company.
And that helped companies with cloud security on day -1, if I have to summarize.
Absolutely. So we used to say that either you're born secure or you're not born at all.
And you were able to prove that hey, if you're implementing security on day 1 or day 2, then you are always be less secure than day -1.
That is true, and also more expensive to remediate.
Right. But then in this case, you have to go with companies that are starting from scratch on their cloud journeys. You can't say that if you are already at 100 mil ARR in your cloud, spending on cloud, then
so this is again a timing thing. So very good question, actually. Glad you asked, because in 2017, 2018, the cloud was just getting adopted. People, like, we would in fact ask people, are you how much workloads do you have in cloud, like, and so it was pretty new. Today when I'm running an infrastructure company, we don't even ask that question. We take it for granted that everybody's on cloud. In fact, we also take it for granted they may be on multi-cloud, they may be on more than one cloud. So in 2017, 2018, I think the adoption was rising, and because the adoption was rising, the security started becoming a concern.
Because currently, if I have the numbers correct, AWS is at 100+ billion in run rate.
Yes.
And Azure and GCP should combined also be together 100+ billion.
Yes.
So you are saying in 2018, this would be way less number.
It was less number, and also it was mostly lift and shift. It was not container. It was not cloud native applications. Cloud native applications started happening mostly around 2018 when Kubernetes came. And actually, that brings me to my startup before that, is a company called Layered Insight that we sold to Qualys. And again, the timing is the reason I say it was timing that got us to the success that we had, is because containers were just becoming a prime thing, a prime way to compute and deploy your applications in 2015, 2016. So Docker became a unicorn. At that time, Sequoia Capital, some of the big VC firms had invested money in Docker.
Which Docker?
Docker. And Docker became a unicorn. And Docker brought containers mainstream into the organizations. So we realized that the Docker would become a new compute, or a new VM in a way. And again, it has to be the security paradigm has to shift. The parameter is shifting. So we were one of the pioneers again in container security, and so we realized that there'll be no gap as customers are going to adopt containers into their production and into their applications and in their workloads. They would need a new way of securing their workloads. So again, mostly timing. We were right in time for the hype of containers, and we rode that wave, and this came out before it become a commonplace.
And this is 2013.
This was 2016 to 2018, 2019 maybe, yeah.
And do you sign agreements during these acquisitions that as soon as acquisition happened, you are immediately out?
I am hoping my buyers are not listening, but if they are, actually have been managed so far to come out of it every time. So by saying that you need tech teams and you need, so that I can just have a fresh mind. I do actually, even each time I do a startup, I say, okay, this is my last, and I'm just going to now invest in other founders and funds and work with folks like you to basically broaden the knowledge. But then I start again. So yeah.
Yeah, but I think we haven't covered across this critical factor in all our 400 episodes. Our episodes have been with founders across India US corridor, with venture capitalists across US and India, and also with policymakers, like people who are building policies for Indian government, like economic advisor to PM Modi like Sanjeev Sanyal, or if you remember early in 1991 in Indian economy, we have hosted Mr. Montek Singh Ahluwalia,
Yes, 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 yes.
who basically opened the Indian economy
Yes, yes.
along with Manmohan Singh in
Yes, yes,
1991,
yes,
right, and other RBI governors like D. Subbarao, C. Rangarajan. But if a nation, I think timing, if I have to summarize now as I think through as you spoke, works even for nations.
yes, true, 100% true. Yes, because I think if you take, see, because opportunity always presents, you have to just open your eyes to that opportunity, right? Because it's knocking your door. Now the question is, are you going to welcome it or are you going to ignore it, right? And I've seen that most people get scared of it, or they think it's too new or too bold, and maybe they not do it. But sometimes you just have to have a mindset to go and
And it again ties back to my observation about you, that your observation skills are amazing, right? And to have great timing, I think this is a must required skill.
yes. So going back to your question about luck versus, so I would say if the founders are able to time their starting the company, um, solving the right problem, finding the investors, and even timing their exit. Because if you hold on to it too long, maybe the valuation will go down. If you sell it too quick, maybe you're not capitalized enough. So I think everything becomes a timing.
Yeah. But you were not a technical founder when you started. You were in KPMG, assume a consultant that you
Yes,
started with,
yes.
and now you're talking about Docker, containers, Kubernetes. It's a vast shift. I understand healthcare because uh, building a services company and then seeing a global more investment in US healthcare. So obviously it's a first principles jump. But then these journeys in building containers and Kubernetes, these are very unique.
So each time I would do a startup, we go to first principle, right? If I don't have the appreciation for what we're building, you can't build. So like I said, I take a lot of time in first understanding the industry, even will maybe dabble myself into, I'm a computer science graduate, so I do have a computer degree, but that doesn't mean I'm by no means technical founder or technical person. But I think enough for me to understand what the pain point is, what the technology is supposed to do, what the advancements look like. So that's important. I think that's, if you're building a tech company, at the early stage of the founding days, you need to be at least having some technical appreciation.
So, in uh, particularly in all the journeys, right? How do you time the exit? Because now I believe you know how to time both entry and exit.
So I think a lot of factors go in, right? Each time I start a company, I start with the goal of taking it IPO, actually. And the reason is because if you ask me, you have to start with problem that is meaningful and large. Um, I also think, and this is probably important for your audience, is that the problem doesn't need to be just big and important. It also needs to be urgent. So I think a good combination of big problem and important problem and urgent will get you success and give you the growth that you're looking for. If you start with that mindset, then you look at what you have created, let's say in 2 years, right? And what the product market fit looks like. What happens along the journey, then you look at your DNA of your, because I've usually would find new founders in each of my journeys because, of course, I'm changing my domains. I need subject matter expertise. I need those people to tell me what they built in the past. And when you look at them, some of them are actually first-time founders with me. So I may be a repeat founder, but the DNA of a whole. So sometimes it's not about me; it's about the company. How far can they go? Can they really run more? Can they build more? Do they have capacity? So then I reach a conclusion whether I need to replace them, or do I can scale, or do we think there's enough strategic interest from someone else? So in most of our cases, the timing has been that we are trying to raise new capital, and that's when one of our partners saying, "Hey, don't raise this capital. We'll give you double the valuation that you're raising it at," and we take an exit. And we think, yeah, it'll take us 2 more years to build to ease into that valuation. We're getting it today. Good returns for your employees. First-time founders. My founders are happy. We take an exit. Yeah. So that's how it has been.
So, if I have to summarize, first company IT services you started. You could do a buyout at the right time. The market was right, Indonesia, right? There a lot of money coming in, and you ran it for 10 years. I took it to 50 million ARR. Second company, a company born out of Obamacare.
Yes.
right? And you scaled it to 10 to 12 million in annual revenues, right? And the insight there was that, you know, physicians are getting paid for by Obamacare for
Yes.
adopting EHRs.
Yes, yes.
So, in these journeys, right, the previous 6 journeys, how many hard pivots would you have done?
So pivots. So no, I wouldn't. It depends on what you mean by hard pivot. So we never shifted industry. So we always had a thesis. We have always done. I don't recall any startup where we have not done a GTM pivot. And GTM pivot, because I always feel that we have figured it on day one because we have very strong thesis and everything. And every time I go to a journey, I say, wait a sec, we have not figured out few things. So GTM pivot we have been doing, and what I'll give you like good example here. We talked about this company which you just talked about, people running in the cloud their workloads. This is a company called Accurix again, the started right before that. Which is a very good example because you did tell me, Sachin, but weren't people already in cloud? And I said, yeah, they were, but they were not moving as fast and they were just doing lift and shift. And the cloud native applications were just getting built. So yes, while it looked pretty lucrative to do shift left CSPM, and that time I said, yes, we were the only ones. We raised the money on that concept because VCs always want to invest in future. We realized that customers are not ready because they're already running their application on cloud. So we had no option but to go to right and solve that problem. Because if you didn't solve that problem, then they are already running another security solution here, another security solution here. They don't want that. They were waiting for these people like Palo Alto and all to come in here and solve the problem here. So we took a chance, we took the bet that we'll open source this on the shift left. We actually completely open sourced it. My investors supported it. We took a board decision and pivoted everything and started selling what they were buying, which is on the right. So we did. So I didn't want to tell you more about, like, since you now brought this up. We did solve that problem through GTM, where our core IP was still on shift left CSPM. That's where we made the money. That's where the whole story and the fundraise was happening. But actually, what we were selling was really a security on the right, because that's where people were. We already had existing cloud. To your point, they already running application, and they need security there.
So, if I have to imagine as a third party, right? The first company was services because you are already in a services company. Second company happened because you observed Obamacare. But after that, how did you observe those changes in the market? Because healthcare and what you are doing after that was completely different.
So that's again a very good question. Actually, it goes back to how I'm built. So what happened is, uh, I moved to US in 2007, and that's when this 2008 is Obamacare. Uh, I came to California, Silicon Valley, and I realized that, wait a sec, why I'm wasting my time in healthcare? This is all about platform, the core technology. All my friends, all my network was all infra people who were thinking of next gen compute and everything. So when you start working with those, I would say, more intelligent people than I am, and you surround yourself with those friends, they start giving you ideas. And then you say, no, I've been missing something in my life. Actually, I should have probably been here 20 years back and starting my journey here, but I need to be feeling like I'm part of the Silicon Valley culture. And I think that motivated me to step outside and look into platform like cybersecurity, cloud security, something which is a lot more meaningful, a lot more broader, a lot more horizontal in nature, that every company would buy. And when you have those co-founders giving you those ideas, then everything follows from there.
So, and how much time do you spend usually researching a domain before you say, let's start a company in this domain?
So there is no, I would say definitely in between startups, before I commit to something, it's definitely at least a year, because I need to talk to at least 60, 70 people. And we usually the way I work is that I decide on a co-founder, and then we together brainstorm for almost a year, whether it's a good fit for us to work together, whether we like each other, what's your working style. We pick up an idea, we validate it, we think, no, it's not big enough or it's not urgent enough, then we come back, we think of it. So we keep meeting every 2 to 3 times a week over a period of 1 year, and then we figure out, yes, we can work together. Then we narrow down on an idea. So that courtship always takes some time, because I'm not really waking up one day and saying, okay, I have a brilliant idea, now let me find a co-founder. It's not that. It's a reverse process for me. I first find a co-founder whom I want to work with in my next startup, and then we figure out what problem we want to solve together.
So if this is another important, right? People usually start with their best friends or one of their previous colleagues, but in your case, you are starting with a well-known person, but in a different domain every time.
Yes. So yeah, so basically I definitely know that person before I start my journey. So I'm not meeting him with an
So trust is
intention.
already there.
Yeah. So I'm not intentionally saying that no, oh, this person is a VP in Uber and I should probably make a friendship with him because he will be next co. No, I do not do that way. If he's already part of my friend circle, we are already socializing, we're meeting. There's already sort of meeting of minds, chemistry, because that's very important. Because this startup journey is very hard. You'll always have those down, like you talked about the lows and highs, right? So you need your co-founder to also understand, your behavioral thing, when you're high, when you're low. And to me, success of a startup is, how strong your bond is with your co-founder, because it's like a marriage, right? So I mean, there will be times when you doubt each other and when you are not, you'll have difference of opinion, but that's healthy in my view.
But how do you assess, because you have known somebody socially, but you haven't worked with them? So how do you, and how do you then ascertain that they carry the same work ethics as you do?
So you will know that in 1 year when you have sort of start to make a soft copy, it's like an engagement kind of a thing. So you already know that it's like, that's why I like the system today versus yesterday's when people do arranged marriages. So here we are, like people are dating, they are basically knowing whether they're compatible. They sometimes even live with each other these days, I think, which is perfectly fine. I think, and I think that's the journey of learning to work with each other. Like you'll know exactly, so if your co-founder, your future co-founder is married to an idea which you think, no, that's not great, and he's stuck to it, then you know that the resilience is low, right? He's not open to ideas, he's not open to new way of thinking. Or if we talk to 50 prospects of us before we jump into an idea, we are consistently hearing, no, it's not a good thing, but he's still married to his idea, then we know, he's not. So you will know. I mean, having done it so many times, you also have use, of course, also some of it is intuition and your gut feel. So not everything is is science here.
I would say you are very humble for somebody who has sold 6 companies.
Thank you.
Does humility play a role in your listening skills and observation?
It does. I think it helps people to build trust and friendship with me because we when we start this journey, we are starting the journey as if this is my first startup. I mean, if I don't have that passion and that uh, 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 drive, I think I'm failing my team. And I think the reason I take it very seriously because when they are trusting me, they some people do join your mission because they believe in your mission, but I think early stage hires are really believing in the founders and even the investors. They do not know what you're going to build. They know you may pivot. Product market fit is not there. So they're really investing in you. So I think it's important that you are grounded and feel like a first-time founder because then you're not really making up anything. You're just your natural self.
And in every one of your journeys, you made your investors and teammates money.
100%. And I would not exclude my equity, but I'll exclude all of my employees because they are not the people who make the decision to sell. We are. So I make sure that they are definitely taken care of all my journeys. Yes.
I want to stress upon, once you sold 2 healthcare companies and now you are jumping into cloud companies, right, or infra companies. What was your learning curve like? It was just like talking to people, like 60-70 people in the infrastructure domain or security domain or cloud domain?
I think it starts with what are we solving, right? And it starts with is the problem worth solving? To me,
First, you have to discover the problem, right? So how do you discover the problem? That's my question.
So that is where the trend comes in, right? So let's say, I'll give you an example, right? So let's say we're talking about container security. So one of the parties, maybe someone said, hey, Sachin, do you know Docker became a unicorn? I said, okay, what's Docker? Of course, I do not know what's Docker.
That's my exact question. And because our audience might not understand what's Docker, what's a container, what's Kubernetes.
Yeah. So in fact, when actually it's a joke. Actually, I should probably it's a recording, and so so when my co-founder brought the whole Docker thing to me, I thought and he said containers. I thought he's talking about container ships.
Yeah.
And I literally, I'm not kidding. And I thought he's talking about saying, hey, can you secure container ships? Because I knew that there's a lack of China. I mean, 2015, 2016, but there's a lot of imports having from China. So I thought maybe they're talking about scanning the containers. They think that I'm coming from healthcare background, services background. So maybe doing a logistics company, maybe the person is thinking, hey, we're going to set up a logistics company where we're going to scan a container and know whether there is anything which is not in part of the packing list or whatever. So literally that was a joke that we were making in that party. And then I went home, I said, okay, let me look what is Docker. I did not sleep that night. I said, okay, wow, this is interesting. Then I went back to see what is VMware. I went back to see why this makes sense. I went to understand what is Linux kernels. And so then you start understanding and appreciating the problem and saying why this is a game changer. And I would tell you, half the investors at that time, actually I would name it even Anderson, did not believe in 2015. I know Sequoia was a big believer that container would become mainstream that quick, right? But we made that bet. We knew that it will be the next compute, it will be the next big thing. Sometimes bet work, like I said, timing, it may not have worked because containers would have never become mainstream, and then there's nothing to secure. So yeah, so it's always, learning is always has to be part of your DNA, and you have to just immerse yourself into it.
So let's come to the journey of StackGen. Like, how did you meet your co-founder here, and how did you both decide that StackGen is the right problem to solve?
So StackGen, I'm working. This is the second startup that I'm working with a repeat co-founder. So this co-founder of mine, Asif, actually was my co-founder in Laid Inside, the one who told me about Docker containers.
Okay.
He'll laugh when he hears this story about ships and containers because that is literally true. And I can tell you how I met him also in a bit. But so I met him actually 2013 or maybe even 2012. But we started our first company in 2015. So you can see that it's really a 3-year relationship that I had before I started first company. After we sold to Collis, he was, like I said, I rolled off because I usually don't join the buyer. But someone like Asif wanted to build his career. He became the cloud CTO for Collis and stayed there while I moved on and started another company called Accurix. Asif was sort of involved in that company as an advisor, as an investor, but not as a full-time founder because he could not join because of his handcuffs. So when his handcuffs were over, I sold Accurix. He had another startup in between for machine learning. We started thinking about doing something together again because we thought, we should probably do one last inning together, which is what we keep saying each time. But because this time our funding principles are so tight that both of us are not in rush to sell, both of us have made money, I think we can take this IPO. Because each time I've realized that we are trying to take the company, and the moment we're trying to scale, someone will make an offer and mother founder would say, well, it's so good. It's a life-changing event for them, not for me, but for them. And I've never been selfish, right? I mean, yeah, okay, the journey has to have an edge. Because what's the point in breaking the relationship, getting a new executive? Then it's a new journey. You did not sign up for that. You signed up for having fun and enjoyment building a company together. So that's what happened with Asif. So he's the one who we together based on this idea. So it was a very natural fit for us. We know each other from past. We have worked together, so we know exactly how each one of us operate.
And can you tell more about how the evolution of problem identification happened at StackGen?
Yes. So we actually we decided to work together in 2021 that we'll do something together. We went around Web 3.0, crypto, and you name it, we started researching in every area, like where should we spending our time, including security, because that was a domain, and solving some AI security problems. In fact, there were 2 investors who literally knew when I was saying I'm going to be back on the block. They told us, we'll get you a $10 million check, just do something in security and we can figure out the idea together. So no, I'm not doing that because I want to first see what I'm getting married to. Funding will come. Some of them are actually your friends and you have interviewed them, by the way, on your channel. The idea of StackGen was born because what we started understanding is the velocity on the development of velocity, the age that we are in, the infrastructure sort of is becoming a bottleneck. This whole DevOps is sort of becoming a bottleneck, and question was that can it be solved at scale?
What do you mean by DevOps are becoming a bottleneck? If
Okay.
you have to explain.
So technically speaking, the idea of StackGen is sort of stemming out from our learnings from Accurix, right? So I'll explain the bottleneck in the context of Accurix. So again, Accurix was the company we sold little less than $200 million to Tenable, right? It was, I think, for the investors, it was the highest return because, I mean, literally our Series A investor had a short-term capital gain for 6x or 7x of their investments because, suddenly, we timed the exit because that time is COVID and securities, there was a lot of money in the market. The problem that we're solving in Accurix, again, just as a reminder, was that the cloud is basically built on the left using Terraform and IAC, infrastructure as code, programmatically to deploy your application on cloud. But when you do that, someone is building the application in Java or Python. then the DevOps person will come and write the code in Terraform or whatever, and then they'll deploy the application. So there's a handoff there. And then the security comes in and says, wait a sec, you can't do that because we need to make sure you're not vulnerable, you're secure by default, you are having the policies, governance, compliance, and everything. So we decided, can this problem be solved? Can we completely eliminate this role? Can we completely eliminate this whole process? What it means is that there's a developer whose intent is to build something on the cloud, which means that if I'm the developer, the promise of the cloud and the containers were that you build, you run. But that never happened, right? Because it just became good on the captions. Okay, you build, you run, or you build, you deploy, because the idea was that the developers do not understand infrastructure, and they should not be, because they can make mistakes, networking mistakes or whatever, right? So the question was that, can the technology do we have enough advancement in artificial intelligence, in learning models and everything, that can we actually automate this whole process where there's a developer and there is actual hardware, actual cloud, and can we be the whole platform in between? And that's where the whole concept of StackGen was built. We used to actually call it AppCD. The company was actually called AppCD, that there's an app and there's a cloud. And we changed the name because people started confusing us with Harness and other CD solutions like Argo CD. They thought we were another continuous deployment. We were not. For us, CD meant cloud deployment, but it was hard to explain to people what cloud deployment meant. So we changed the name to StackGen.
And what is the problem that you are solving today for largest of your customers?
So we basically solve, so our ultimate goal is to be an autonomous infrastructure, which means, and again, if I want to break it down, the way we see the vision is, can we be full self-driving for infrastructure? So how you see an autopilot car, where you just sit in a car and it'll be self-driving, there's no driver. You just tell them, I want to go from here to there, and they navigate. That's what we want to be for infrastructure. So the problem that we're solving, of course, we are not taking, we're not asking the customers to have a leap of faith that we are there yet. But our idea is that we're bringing in a platform that customers can truly rely on us for improving their developer velocity, their pipeline velocity, their governance at scale, not just small governance, but really at scale, and also to reduce their cloud costs, optimize reduce their incidents, production incidents, improve their availability, improve their resiliency. So it's actually a pretty broad platform. It is not a point solution that what my previous startups were.
And but the argument here can be, the cloud providers themselves are so advanced today that they can build it in-house.
Cloud providers' core business is to provide them the services on the cloud. They can they do it? Yes, everybody given the amount of money that they can invest, they can do it. The opportunity is that 90% of the customers that we talk to are enterprises, and they're multiple. They may not be multi-cloud, but they're multiple cloud. I think there's a slight difference, right? Which means they're already betting on more than one cloud. Then question is which stack to pick up. We are, by design, we are multi-cloud. By design, we are multiple cloud. So we don't care.
What is multi-cloud and multiple cloud?
So multi-cloud is my definition. I don't know whether it's the industry definition. For me, multi-cloud would mean that you're building a generic cloud native application that can freely be deployed on any cloud without making any single change in the line of code. Multiple cloud is that you have certain applications run on one cloud, certain type of applications that run on different cloud. Most enterprises are not truly cloud native, that they can port their application one cloud to another cloud without any problems. Most organizations are multiple cloud. They run maybe their payment systems on Azure and maybe their human resources on AWS. I'm just making it up, right? So that's multiple cloud in my definition, that you're betting on two clouds versus a single cloud.
But as the environment is so evolving so fast, right? What are you seeing that are the things to start according to timing today?
I think it's all about AI. I mean, right now the timing is that if you have if you have a domain expertise and you're solving a problem that is meaningful and has an impact on a business, pick up that problem, use AI to solve that problem. I think that I would say that would be the timing. I mean, if you are solving a problem, if you're thinking that you're solving a problem and you're putting a wrapper with AI, then you're not solving a problem. I think you have to think AI native, not like how we used to think cloud native. You really have to think AI native. I know we are taking the view about whether this will replace some jobs or something. It will eventually happen. So the question is, if someone is going to do it, why not you? So I think pick up the right timing is to pick up an area where And it could be any industry, right? So
let's say today you are again the 7th or 8th time founder. What are the top 2-3 areas that you would start today based on what you know already? Like, I agree, AI native is one, but
if I were to do my 8th startup, I think it will not be for profit. It will be for not for profit. I'm pretty sure about that. And it will be to create a larger impact using artificial intelligence. It will be basically to either to solve education at scale or providing healthcare to scale, but something at scale, but using AI. That'll be my 8th startup if I have to. If probably I will do, but it'll be in that area.
but let's say a better question could be somebody who is closer to you. Let's say maybe your son or a founder that you are
Oh,
close
I
to.
see what you're saying. Okay.
Yeah.
Okay. What would be my advice if someone was to start?
Top 3 areas where Sachin would start if Sachin was, let's say, 5 years.
I think you have to think where this whole world is going, and again you have to think of timing. If I have to bet, I think you have to think what will happen in future is like AGI. I think AGI will become reality. Again, for your audience, it's general intelligence, artificial general intelligence, which means the humanoids or the robots or AI would start thinking on their own, which means they'll make their own decisions. They'll make decisions on things they've not been trained on. Now, can that be risky? Yes, because now they can be lying to you. They can be They can be basically convincing you to do things that you don't want to do. So yeah, that's possible. But they will also have brain on their own, which means they'll learn things that you're not trained them on. So I think the future of agents would be that agents will create their own agents on demand, which means if an agent thinks that we need some task to be done, it'll think about thinking and it'll probably create their own. So I think the opportunity is to think in those areas where the future of AI would take us. So what will be the next generation of applications that will be required? Start thinking of them today because that future is not very far. And the second area would be every area that you think about, move away from automation. Where automation is done, you have to think autonomous, which is self-governing, self-driving, something that is operating on its own.
What is the difference between automation and autonomous?
Automation, you are basically automating a process, right? So basically, you're saying, okay, like a workflow automation. I'm going from from point A to point B. Most of my startups have been automation, right? We are automating a process. We are automating something. We are improving efficiencies. We are improving. Efficiency. We are reducing cost. We are improving security. That's automation, security automation. Autonomous is something that operates on its own, which means you just tell them the objective, the goal, it figures out its own path, and it solves a problem it's trying to solve at scale.
So basically, the good example to give is once you're driving a car from A to B, the Google Maps gives you a path, different paths, let's say.
Yeah.
But in autonomous system, you don't have, it'll
So
not ask you.
so good example is that car is giving you like a machine, like an automation to go from one place to another place faster. Autonomous would be that it's just taking you there.
So you are solving today problems for extremely large customers. For example, InMobi is one of your customers. InMobi is planning to go public
I know.
soon,
Yes.
right? And they spend more than $100 million on cloud, let's say. So for our founders, so how did you, first of all, discover InMobi, convince InMobi team that StackGen is the right solution for them, and what is the problem that you are solving today for InMobi?
So, like you rightly said, InMobi is starting to go public, but I think more importantly, they are spending $100 million plus in their cloud. I don't know the official numbers, but they have pretty big footprint. They are migrating from AWS to GCP now. That's a public news, and it's a strategic move by the company. InMobi. So we first when we started building the solution, the CTO of InMobi, Mohit, was one of the person that we interviewed as part of a journey. That hey, are we solving a problem which is important, significant? Is it something that is worth solving? Obviously, at that time, we did not know that InMobi would be a customer because as US company, we are not really chasing Indian customers. I mean, I still put InMobi as an Indian customer. What happened with InMobi is that because they were going through their transition from one cloud to another cloud, there were opportunities. They wanted to make sure that now when they build their new cloud, it is built with proper governance, proper controls, as if they're building it with best practices, with least amount of human involvement. So the concept of building a ground-up cloud with automation, with, like I said, even though we can talk about autonomous, but right now people are scared to give you full control of the infrastructure. So we are thinking more like a co-pilot, and co-pilot in my view is automation, right? Co-pilot is not autonomous, right?
Agent is automation,
Yeah,
autonomous.
yeah. Agent with the powers to execute is autonomous, which means, as an example, just to complete the story, is that if I want to say I want to book a ticket and agent is deciding on my behalf which seat to pick up, then that's autonomous. But if the agent is only helping me shortlist, and then I am using it as a co-pilot to actually, assist me, and then I will select, then it's not autonomous. Then it's automation. So again, our definition. So in case of InMobi, we think the problem we are solving was very critical to them, and the problem was really about how do you improve developer efficiency. Like if there are 200, 300 people writing their code, and they're using AI, then why is infrastructure is not being built using AI? And InMobi is very forward-looking, tech-forward company. They're probably one of the best talent in India that I've seen. Extremely bright people that we work with, and they actually help us design our product. I mean, I don't treat them as a customer; I treat them as a partner, because they actually help. They're really bringing some of the best knowledge into a product, or best feature into a product that actually our US customers probably not having even thought about. So I definitely think they're one of the most progressive company, and there's a reason why a lot of startups have come out of InMobi, because they probably hire very good talent out of India, and that's a problem we're following for them at scale.
And go to market is always a question for founders. So how you maybe tell about how you solving that at StackGen?
So initially, for every startup, the discussion start with understanding the pain point of a customer. So that, are you solving a pain? And because of that, I would say founders and your head of product is always involved in the initial discussions. So it's always a founder-led sales. You always have to go talk to the people and see whether they are resonating with the problem that you're solving at scale. So the initial go-to-market is always that you talk to those people who have early belief in your product, and they trust you that you can develop. And this is where maybe some bit of benefit that we get as repeat founders, because the trust is sort of implicit, because they know that we built it, so we're not wasting their time. And then you try to get a pattern out of those first 10 customers and say, okay, this is a pattern, this is a common problem. Can we now scale? So the go-to-market, then you build around that common problem, and it's okay, who's your buyer? Firstly, you say, go by geography. Okay, it's US. Then you say, within US, do you want to target the large enterprise, mid enterprise, small enterprise? Like, what's your go-to-market? Then within them, who's a persona who's going to buy? Sometimes the buyer is not the user of your product, and that's the hardest sell. By the way, that is the case can be the case with StackGen. It was also the case with security. Sometimes the user is someone different from the buyer. Then you figure that out. So now if you have a user, then you get a user adoption motion going, so that you use them as an influencer to influence the buying decision. So I think go-to-market is always an experiment in my view, because product is still the same, but how you package it and how you go to market is always going to be different.
And AI agents are the rage today. So what are the agents that you have built at StackGen?
So because we are going for full autonomous infrastructure, we start with the journey of build. So where does the infrastructure start? It starts with building the infrastructure. So we have agents for building infrastructure. So we have an agent called Stack Builder, which will actually build your infrastructure based on.
So you can just prompt it and it will
yes,
build.
You just give your intent. We call it intent to infra. So your intent is your input. That's it. So that means that I have an application that needs to run with PCI compliance policies, because it's a payment service with a database. Leave it to us. Then we take that intent. Our agent will take care of your deployment and everything. The second thing comes so after you build the infrastructure, then it comes continuous governance. So we have an agent that will keep monitoring your governance while because we come from security background, that comes very naturally to us. So that is governing your cloud. Then comes, once you're on the cloud, then two things happen. Either the incident will happen, or a drift will happen. So then we have an agent that basically looks at your incident, looks at the root cause, because we are the ones who built your infrastructure. We actually know what may have gone wrong. Of course, the incident can also happen because of application error or application gap. So we have an agent that looks at your application code as well, and then we triage that and say, okay, this is why it happened, and we remediate. And the last thing in the cloud is optimization, because when everything is running, you have nothing to solve. What is an agent doing? It's basically you're continuously optimizing, and that optimizing is also backed by a learning agent, which then gives a feedback into the building process to make sure that we are actually building an optimized infrastructure. So think of this as closing the loop. So we currently have 7 agents today, and we are trying to target an end-to-end autonomous infrastructure. We're probably the only one that has a full, complete vision of autonomous infrastructure.
And how big you think this can get today?
To me, this is literally $100 billion plus story. I think the way this, I'm again not trying to take the jobs of DevOps here, because I think they are a very important component to this whole thing. But we are going after the 150 billion TAM of DevOps. I think my view is that future should be that everything is autonomous, and we don't need that role in an organization.
Yeah. And why do you think in this case the timing is right for you again?
Because if AI is writing your code, someone has to write your infrastructure. And so now the question is whether I build a startup or someone else builds a startup. And to your point, will cloud providers do it? They probably won't, because they'll stick to their own stack, and they'll always get limited to what they can do for their stack. They will never do a cross stack. Plus, they will never go downstream to solve the problem. They'll rather focus on providing more availability and more reliability, more zones, more GPU. They'll probably go more hardware direction rather than going downstream here to solve enterprise problems. They may buy us.
Thank you so much, Sachin. Would love to do an episode 2 with you in the future. And I have only been able to cover maybe 20% of the points that I have prepared. But this discussion has been amazing. The most important takeaway for me has been timing. So probably would love to name the episode "The Timing is Everything."
Timing is okay. There you go.
Yeah. And also, how continuously you are able to learn. I think that's very important, because without that mindset, you can't have the ability to time things the right way.
Yes. Thank you. Thank you, Siddharth.
Thank you so much for sharing.
It was so much fun talking to you.